Good day, everyone. For today's session, we will discuss about proof of cash. Okay, for the learning outcomes, these are similar with the learning outcomes of our previous discussion. Let's go directly to the learning outcomes. Number one is to explain proof of cash, and number two, prepare a reconciliation showing proof of cash. And since one of the learning outcomes is to explain proof of cash, so let's discuss proof of cash. Okay, proof of cash is an expanded reconciliation. Okay, what we did last time, if you can still remember, is a one-date reconciliation. So proof of cash is an expanded reconciliation. So what does it mean? It shows a proof of receipts and disbursement. And this proof of receipts and disbursements are not present in the bank reconciliation we did last time. Okay, and it is useful in discovering possible discrepancies in handling cash, particularly when cash receipts have been recorded but have not been deposited. And this is prepared only when needed. So as opposed with the one-date bank reconciliation we prepared last time, wherein we prepared the bank reconciliation every month. Proof of cash, on the other hand, is when needed, usually in fraud investigations involving cash. And in preparing the proof of cash, sometimes you will be required or you will be tasked to compute for the missing amount. And some of those amounts are the deposit in transit beginning or ending. Okay? So in deposit in transit, we learn that there are two items which we compare. So we have the cash receipts per ledger and the deposits per bank, or the deposits appearing in the bank statement. Okay, so if our cash receipts is the same as the deposits appearing per bank statement, then there's no deposit in transit. However, if our cash receipts per ledger are more than the deposits appearing in our bank statement, then there is a deposit in transit ending. Okay? And what if there is an existing deposit in transit or beginning deposit in transit? So we have to add that with cash receipts deposited during the month or the cash receipts per ledger to get the total deposits to be acknowledged by bank, less deposits acknowledged by bank during the month or the deposits appearing in the deposits column of the bank statement, and that will be the deposit in transit end of month. So let me share with you a specific example for our deposit in transit. Okay, assuming that the cash receipts per ledger is 100 for the month, okay? And the deposits per bank statement is also the same amount, 100, then there's no deposit in transit. Okay? So second scenario, what if our deposits per bank statement is less than the cash receipts appearing in our ledger? So let's say 90 pesos, and the cash receipts for the month per ledger is 100. So we have a 10 pesos difference, and that is the deposit in transit ending. Okay, so let's move on to the next scenario. So assuming that the deposit in transit ending is the beginning, the IT, and then for the month, the cash receipts amounted to 100 pesos. And this too is actually the total amount to be acknowledged by bank. However, the deposits which appeared in the bank statement is only 110, or should I say it's 110. So there's no deposit in transit ending. So what if the deposits per bank statement is 90 pesos? Okay, less than the total amount to be acknowledged by bank. So the difference of 20 pesos is the deposit in transit ending. Okay, so let's continue. So if you have here the account, okay, so let's recall the previous formula which I shared with you. It's just that in this slide, the presentation is using a T account. Okay, you have the deposit in transit beginning balance, add deposits made during the current month, less deposits credited by bank during the current month, and that is your ending balance. So what did you notice? So all items which are not related to collections made by the entity from its customer, or the deposits are only pertaining to collections made by the entity from its customers, and then the deposits credited by the bank based on the collections made by the entity. So those are the items that will appear in your computation. So all items such as credit memo, last month or this month, book error last month or bank error last month or this month, those are excluded from the computation. So meaning to say, you will go back to the basic formula. So you have the cash receipts per ledger and the deposits which appeared in your bank statement. And the thing is, those deposits which pertain to the collections made by the entity. So those collections made by the bank on behalf of the entity are excluded, and also the errors, okay? Next is the outstanding checks or the outstanding checks. So similar with our deposit in transit, we have to compare two items. We have the cash disbursements through check per ledger versus the withdrawals column or the checks paid per bank. Okay. So if our cash disbursement is the same as the withdrawals or checks paid per bank, then there's no outstanding check. Okay, the assumption here is that the cash disbursements only pertain to disbursement through check, okay, per ledger, and the withdrawals pertain to the checks paid per bank. So we will exclude here those items such as the errors made by the bank or the NSF check, okay, which are debit memos and appears in the withdrawals column of the bank statement, okay? Then if our cash disbursements are greater than the withdrawals, then there is an outstanding check ending. Okay, so let's have here another formula. So if our outstanding checks have beginning of the month, we have to add the checks drawn by the depositor during the month or the cash disbursement through check per ledger to get the total checks to be paid by bank. Then less checks paid by bank during the month or the withdrawals in our bank statement, and then that will be your outstanding checks end of month. So let's say we have here cash disbursements of 100 pesos and the withdrawals appearing per bank statement is also 100. So there is no outstanding check. Okay, what if the withdrawals per bank statement is actually less than the cash disbursements for the month? So we will have an outstanding check and 10 pesos. And what if there's a beginning outstanding check? The outstanding check ending 10 pesos becomes the outstanding check beginning 10 pesos, and the cash disbursements for the month or the checks drawn by the depositor during the month is 100 pesos. That will be the total amount to be paid by bank. The 10 pesos and the 100 pesos, that will be 110. And if that amount appeared in our bank statement, so meaning to say 110 also, so we will have no outstanding check, okay? And then what if the withdrawals per bank statement indicated a 90 pesos, let's say, amount, okay? So we will have an outstanding check ending, okay, which is 20 pesos. So this is how we compute for the outstanding check. Okay, if you're going to use the T account, so very similar with the T account of our deposit in transit, we will exclude, okay, all items which are not related to checks drawn by the entity. Okay, so you will notice these items as deductions in the T account of our outstanding checks. So debit memo current month, effect of bank error. Okay, last month, current month, debit memo last month, effect of book error last month, and current month. So what was left? It's the checks in cash by bank during current month and checks drawn during current month. Okay? Let's move on to the forms of proof of cash. So similar with our bank reconciliation, we have the adjusted balance method, the book-to-bank method, and bank-to-book method. Okay, what I will be focusing on today's discussion is the adjusted balance method. Okay, and this proof of cash is usually with a 4-column worksheet, although under adjusted balance method, an 8-column worksheet may be required. So basically, it's a 4-column. Okay, so we have the header. Okay, so when we prepare proof of cash, it's very similar with our bank reconciliation, a one-date bank reconciliation, but this time this is an expanded reconciliation wherein it involves 2 dates and a proof of receipts and disbursement. So we have the 4-column, the previous month, the receipts column, the disbursements column, and the current month. Okay, so let me share with you the previous month's reconciliation. So very similar to our reconciliation last time. So you have the balance per book. You consider the reconciling items, book reconciling items to come up with adjusted book balance. And you also have here the balance per bank and the reconciling items to come up with adjusted bank balance. They should equal, okay? So in this case, we have adjusted book balance of 59,000, the same adjusted bank balance, okay? How about the current month? The same. You also, again, consider the book reconciling items to come up with adjusted book balance of 80,000. In your bank balance, you also arrive at the same amount, 80,000. Okay, you know this. Okay, you know how to prepare the usual bank reconciliation. The challenge is the receipts column and the disbursements column. Okay, okay, in the receipts column, okay, so you have to identify which of the book reconciling items should be put in this receipts column. Okay, so it's very clear that we will include the note collected or the credit memo. Okay. Okay. So we also have the bank balance, the adjusted bank balance. Okay. The deposit in transit. So this item should be under the receipts column. Okay. And what did you notice? Okay, they have the same balance of 205,000. Okay. How about the next one? Okay. So let's check the next one. The disbursements. Okay. The NSF check and service charge. These are debit memos. So we will put this under the disbursements column. So you have the adjusted book balance of 184,000. Same with our balance per bank. The outstanding checks should be under the disbursements column. Okay, so what did you notice? Okay, the same balance, 184,000. And if you will cross-put and you will put the 80, you will arrive at 80,000. So meaning 70,000 plus 20,000 minus 10,000 is 80,000. Okay? Cross-put, 59,000 plus 205,000 minus 184,000 is 80,000. Okay, the same with your bank. Balance per bank, 124,000 plus 75,000 minus 119,000, 80,000. Then 59,000 plus 205,000 minus 184, that's 80,000. Okay? So let's examine further. Okay. So we have here the adjusted book balance. And under the receipts, as mentioned, the note collected should be included. The thing is, why did we deduct the January note collected or credit memo, and why did we add the February credit memo? Okay, so we have here the analysis. So please take note that our book reconciling items are the items in the bank statement which did not appear in our per ledger. So we will be adjusting the amount based on the treatment of the bank. Okay? So let's analyze. Okay, the January note collected actually do not affect the bank receipts, but increased the book receipts. Okay, so what's the effect? It results to the overstatement of our book receipts because the depositors only recorded the credit memo this month. Okay, so what you should do, you have to deduct the previous month's note collected. And then for the current month increased the bank receipts, but it does not affect yet the book receipts because it will be recorded by the depositor the next month. So what's the effect? Our book receipts are understated in relation to the correct receipts, and therefore we have to add the current month's credit memo. Okay? So next, so we have the disbursements. And as mentioned, our disbursements, we have the NSF check and the service charge. Okay. The debit memos of the previous month actually do not affect the bank disbursements, but increase our book disbursements. And the result, our book disbursements are overstated in relation to the correct disbursements, and therefore we have to deduct the previous month. For the current month, on the other hand, the bank disbursements have increased. However, the book disbursements, however, it does not affect yet our book disbursements. Okay, no effect yet on our book disbursements, and therefore our book disbursements are understated in relation to the correct disbursements, and therefore we have to add. Okay, so let us recap. For our receipts and our disbursements, the previous months are deducted from the current month receipt and the current month disbursements, and the current month reconciling item, the credit memo and debit memo are added. Okay, let's move on to the bank. Okay, so as mentioned, the reconciling items of our per bank include the deposit in transit the previous month and the current month. Okay, so let's examine and analyze this deposit in transit previous month, current month. Okay, you will notice that the previous month's deposit in transit do not affect the book receipts but increased our bank receipts because the bank only recorded the deposit in transit this month. So what's the effect? What's the result? It overstate the bank receipts in relation to the correct receipts, and therefore we need to deduct the previous month's DIT. Okay, how about the current month? The book receipts for the current month have increased because of this DIT, but do not affect yet the bank receipts. So therefore, our bank receipts are understated, and therefore we need to add the current month's deposit in transit. Okay, so how about our disbursement? So we have the outstanding checks previous month and outstanding checks current month. Okay, for our outstanding check, you will notice that the book disbursements, it does not affect or no effect yet or no effect in our book disbursements. However, it increased the bank disbursements because the bank only paid the checks this month. So what's the result? It overstates the bank disbursements in relation to the correct disbursements, and therefore we have to deduct. Okay, and then for the current month, the book disbursements have increased, but no effect on our bank disbursements because it will be paid by the bank next month. So what's the effect? Our bank disbursements are understated, so therefore we have to add. Okay? So if we're going to recap for our balance per bank, adjusted bank balance, our reconciling items, you notice that the previous month's reconciling items are deducted under the current receipts and current disbursements, and the current deposit in transit, or reconciling items such as deposit in transit and outstanding checks are added. Okay? Okay, so we will have a next video for a sample problem. But for the meantime, let me share with you the references for this discussion, and please answer this activity. It's not activity 1. It's activity 3. It's a true or false. Please go to Kahoot and game with game pin shown on your screen. Okay? So again, don't forget to like, share, subscribe to my YouTube channel. Thank you very much.